Hey everybody, and welcome along. Nice to have your company today. We'll be underway with the Actions to Wealth team in about 5 minutes from now. I've just come in live to set up and make sure that the live stream to the outside world is working. It doesn't look like YouTube is streaming to me. I'm just having a look at that now. Ooh. I'll just log in and test a few other things. I'll just keep talking. What I'll do for now is just to, for anyone that joins, I'll just put up a chart. So you guys have got a chart to have a look at. I'll do the Fusion Markets one. Been another interesting week in the market, guys. Bit of a weird pullback on Friday, and yeah, we will have a bit more of a look at that with Julian as we go along later on today. I'll just check the questions as we go. You're welcome to ask some questions. We will be live again, guys, in about 5 minutes. I am just seeing if I can get some live stream working. It doesn't look like it's working to me at the moment, which is a bit frustrating. I'll just see if I can sort that out. I'm going to jump onto YouTube from somewhere else. I will just come into here and have a look at the chat. Cheers, Gary. Much appreciated. Looking forward to having a chat with you tomorrow. Right, let me, guys, I'll be just over here looking on the screen for a few minutes while I see if I can just check out whether we're working. It doesn't look to me like it's working on, oh, here we go, live. There's something live happening there. It does look a bit more like, it's streaming. I'm going to see if I can, yep, Actions to Wealth live now. I'm going to see if I can. Share to your timeline. There we go. Looks like that'll be working. I'll just check YouTube, guys. Just want to make sure this is all working. There we go. Actions to Wealth live now. Looks like that's working. Just need to make sure I've got everything muted. Don't have any microphones on to pick anything else up. Lots of guys coming in. Okay, guys. Look, I'll can somebody just confirm for me again, please, that we are on. Can someone please confirm for me again that your sound is coming through okay, you're picking us up okay, that everything is okay? Would really appreciate that. Looks like we've got somebody else in somehow. Simon, you've raised your hand. Can you just... I've got me as an Actions to Wealth host. I've got an Actions to Wealth co-host. I'm just thinking that's probably Jeff. Jeff, you the Actions to Wealth co-host? Interesting old times, mate. We are, as far as I'm aware, we are now still working YouTube for your sound is working great. Just because I've got a number of computers on now, I've now got this on. I'm watching this on Facebook and YouTube, and someone in the world apparently is watching this on Twitter. Fantastic, guys. Fantastic. Look, guys, big show ahead of us. Jeff, co-host, that is the man that's in with me. Jeff, how you doing? Still looks a little bit muted to me, but I will push on. Look, guys, we're going to be underway in a couple of minutes. We have got an introductory chat soon. Alexis will be joining us for fundamentals after that. Julian's in. Always love it when Julian's in. He'll be finishing off his coaching with his group about now, grabbing a quick glass of water, and he'll be back to join us at 25 past the hour. He's doing 4 charts with us. We'll have Ping Ni on oil. Wasn't that a revelation last week, guys? Didn't you love having Ping Li into the oil for us? Ainsley, the Golden Girl, she'll be back soon. Top of the hour as well. Lloyd's Currency Index again. Loved the new stuff last week. Thought it added real depth to the show. We'll have Lloyd back. By the way, and we'll have Jeff on 4 charts, not far away from that. Guys, I can't hear anybody.
I am here, by the way. Sorry.
Hey, mate, how you doing?
Yeah, I'm good. Having a little bit of trouble with the unmute button, but there you go. No, everything's fine here, mate. I'm glad I'm in Tassie and nowhere else on the planet, to be frank.
Oh, mate, I feel the same, mate.
You as well.
You know what I did last night, mate?
Went to church.
I went and watched a game of rugby, and went out and had a few drinks in Wellington with everybody else, with no masks, no hand sanitizers, no restrictions. You know, there was, I think, 18,000 at the game. You know, it's just it's huge. It's just
yeah. We went out for dinner and went to a movie actually. So it is nice to have that freedom, I've got to say.
Yeah, look, it's interesting just having a look at stuff. Looks like we are being watched on Facebook. Looks like we're being watched on YouTube. I'm streaming to my personal Facebook as well. So hey, everybody back in New Zealand, if you're watching, I can't actually see that one at this time just to find out whether anybody is in there as well. But if you are, don't worry, guys. We'll have the cool people on reasonably soon. Ainsley, how are you?
I am very well, thank you. Paul, how are you? Hi, Jeff. How are things?
G'day, 8.
Oh, is
Ainsley,
it cold? Cold and
Cold.
wet.
Minus 14.2 we got during the week, just up the road.
Oh gosh, that
What?
does sound cold.
Yeah, minus 14.2. Not here.
Ainsley, looking forward to having a chat later on. I know you've exited most of that gold trade. Really looking forward to your section where you're going to talk a little bit about gold with us today. It's the topic of the week still, as everybody knows. So looking forward to doing and getting into that. And Jeff as well, other than the temperature, looking forward to hearing how the slingshot goes. Here's my pick. I think it's all about to consolidate. I think we're going to hear today all kinds of different views from very good traders. A lot of people talking about some US dollar strength in the short term. But and I know that technically doesn't. Yeah, it just looks like a range starting to form to me. So I'll be really interested to see hear some different views and share those with you guys as we go along.
Have you changed your name to Father Christmas?
Yeah, you wouldn't mind a range or two, would you, mate?
That'd be okay.
But we are
All
there we go.
claws.
I'm just trying to find my own Facebook to see if anyone in back home is having a look. I don't know how I know if they are or not. But look at that, guys. Look, feel free if you're joining in and you're enjoying the show and you want to share the show with friends or anyone else. Just feel free to share it. Let them know they can watch us on Facebook or YouTube and let them know, guys. We are just having a quick chat before we get into the charts. Alexis joined Alexis. Due to join us when I give her some powers. She is in the room. I'm promoting her to panelist now. Once I've done that, I have to come back and promote her to co-host. It's a bit of a weird two-step thing. Just having a look to see if we've got anyone else in the room. I think Ping Nee may come in the same way. There he is. We'll give him some powers as well. I was just saying, guys, I love the show, and I thought it was awesome. It's been awesome for a long time, but I really liked the extra people joining last week. I thought having Ping Nee and talking about his approach to trading world was a real plus, and I thought having Alexis doing the fundamentals is a nice start to the show. And I think as well as that, I really enjoyed Lloyd's part last week as well. Looking forward to that and hearing what's the strongest and the weakest currency pair when it comes to currency pairs, when it comes to currency trading. This kind of stuff is interesting to know, and we need to keep a fair bit of currency stuff in our show. We are a Forex trade. Well, while we trade a lot of stuff, and right now everybody in the world trades gold, we do need to keep a bit of focus on other stuff as well. The only problem with having Alexis in the room is every time I say her name, my Alexa app in the office turns on. Alexa, off, please. Thank you.
Lexi, just say Lexi.
Lexi, that's what I should be doing too. Ping Nee, welcome along. How are you? Oh, I'll tell you what, I'll give you guys all some superpowers, so you guys can actually join this. Make co-host. Look, we will be underway properly in a second. I started a bit early today to see if I can do a bit of work on the live streaming. If anyone's able to tell me if we are live streaming to Twitter as well, that would be great to know. We've got about 70,000 followers on Twitter, so we could well have some decent numbers. Don't get nervous, everybody. They're just nice people. Just fine. But yeah, looks like we can have quite a few in for the show. Ping Nee, how are you?
Hi, hello. Can you hear me?
We can hear you fine, mate. How was your week?
Having a quite good week.
Good. Ainsley, we're going to hear all about gold from you a little bit later on.
Yes.
Gosh, it feels like the only show in town at times, doesn't it? It does feel like gold is everything right now. Look, we're going to get underway with Alexis in a few minutes, and she's going to do fundamentals. Julian will be coming in. He's going to talk charts. I'd imagine he'll be doing his coaching, and that group of four, those lucky four that work with Julian. He'll be finishing it off at the moment and joining us reasonably soon. Ping Nee will be on for all about 10 to. Ainsley on gold on top of the hour. Lloyd on the currency strength index soon after, and Jeff on four charts not long after that. Going to be another full-on day. And by the way, in case I haven't said it, guys, happy birthday, Singapore. Hope you guys have had a very special day today. It's a wonderful place. And one of the things I've always loved about visiting there is how proud Singaporeans are of their country and how they do get out and think about National Day and really get involved. And you guys are lucky to have such a day there. It really is a a cool thing.
Happy
Right.
day, everyone.
Yeah, happy day. Happy National Day, Singapore, and may you have many more happy national days. Look, Alexis, how have you been?
Good,
Alexia,
good.
do you hear us?
Yes, I unmuted.
Yeah, welcome along, Alexia. Look, it's a fundamentalist. Hey, Helen, welcome along. It's a fundamentalist. Helen, did I hear that you doubled your account? Is that true? Was that someone? Did someone tell me that wrong? Or nearly doubled your account? Can you pop it in the thing and let me know? Lexi, it's one of those things where if you can get the fundamentals right at the moment, you can lead the market right. It's not easy to get them. There's a lot going on, but if you can get them right, you're on the way, right?
Yeah, it's pretty true, but I think the benefit is about the multi-time frame of the situation is where you get the medium to long-term fundamentals right, and you enter on a smaller time frame, and you can kind of ride it a little longer in terms of riding the trend or the wave or whatever we call it.
Fantastic. Over to you for 5 minutes on fundamentals, Lexi.
All right, so okay, so I'm just going to share a screen really quick so I can go through the stuff, and this is my screen. Number 2. Okay, that's
I know when we say this, it sounds really slow and all, but honestly, you'll be amazed at how clunky Zoom is to use at times. And the controls hide behind your charts. So you bring a chart up and the controls hide behind it. It makes it really hard to use Zoom. So that's why there's always a little hesitant voices while we're doing this stuff.
That's true.
Back to you, Lexi.
All right, so review of last week, I was focusing on the dollar Sing also because it's a happy national day today. We caught this level on the weekly time frame, and I managed to get it on a smaller time frame. And again, I'm still focused on the dollar Sing, not because it's National Day, but the fundamentals, like I said, don't change within the week. It will take kind of some time, so I'm also continuing last week's focus by looking for more opportunities on dollar Sing this week after the retracement. Now, let's talk about the US dollar a little bit. Now, this is the trade-weighted US dollar index, and I'm talking really fast because I've only got a couple of minutes. So too bad, guys, you got to just listen really closely. All right, so this is the trade-weighted US dollar index, which means it's weighed against a basket of the other currencies, right? So if you actually compare this, we actually see that the US dollars has kind of appreciated against the other currencies, regardless of how the situation has been going on. So what we're going to look at now, let's compare this against emerging market currencies versus US dollar. As we all know, emerging market currencies has not been doing really well, right, over the past years. But curiously enough, if you want to compare it against developed market currencies versus the US dollar, you can also see that the direction of the currencies doesn't seem as fantastic as well. All right, now this is a particular reason for this is because the weakness for basically every other nation's currency against the US dollars, traditionally, because a lot of these current countries, they hold a trade deficit with the US, which means the countries actually sell more goods to the US than they purchase from the US. So this creates the deficit, which kind of slowly snowballs, right? So ironically, even if there is a trade deficit between two nations other than the US, it can still kind of cause the US dollar to appreciate because, right, the logic is that the country that runs a trade surplus buys US treasuries with its excess holdings. So basically it's because, US dollars is being used everywhere, right? And if we actually look at I actually looked up some statistics, 44% of payments over the SWIFT banking network are in US dollars, and the balance 61% of global foreign exchange reserves are actually in US dollars. So the next question is, what's actually driving the US dollar lower right now, despite all these other currencies depreciating against it? Very simple. Let's look at the treasuries. All right, this 3 lines over here is the 30-year Treasury Inflation Index security. So what this means is 30-year treasuries, and it is priced in for inflation. So you have the real yields minus inflation. And if we actually look at the current situation right now, you can see that we are actually in a current negative yield. That means you have already priced in inflation for this. So if we are talking about US having potential negative returns, so basically what investors are doing is they can see this, and what they're doing is selling the dollar for other assets. So the fall in the US real interest rates and the US dollar coincide perfectly with Ainsley's baby, which is the rise in gold price. All right, because if treasury yields are falling and people don't really want it because of negative yield, what they go to gold. All right, and again, this is the gold chart over the past 10, 15 years about gold, and this is part of the reason why people are shifting away from US dollars going to hard assets. All right, so I do kind of see continued increase in gold because of the way the entire situation is going in terms of global economy, and that's what we're looking at. Now, just popping a quick look, this, okay, it's a bit dark here, but this is the value of the COVID-19 fiscal stimulus package in G20 countries as of June 20. Right, so if you look at this, it means these are the countries that have created fiscal stimulus packages, injected money into their country via monetary or fiscal policy, whatever. And this is the percentage of money they've pumped into a company and compared against their GDP size, right? So US is the biggest in GDP, but they've only got 13.2. Japan is ranked, I think, number 5 or 6 on the GDP scale. They have got the highest number of stimulus down there. And what I am interested in is the European Union over here. They are the third biggest GDP in the world. And they've only pumped in about 4.3% in terms of GDP. So my attention next week will kind of go to the euro dollar, okay, because that will be something that I do see continued strength in the euro dollar over the long term. Also backed off the weakness of the US dollar, as well as the European Union seems to be working together, you know, and they look like they are probably going to do pretty okay as comparatively over the next couple of months. So I'm looking for euro dollar next week. All right, that's my 5 minutes up, and over to you, Paul.
Actually, I've got to ask. We've got a few minutes. Julian's held
All
up on the
right,
way. So,
awesome.
you can hear me okay?
Yes, can hear you fine.
Fantastic. Hey, so the thing is this, right? So, Europe's only put in 4.3% of GDP for stimulus, right?
Yes.
And the US has put in 13% of GDP for stimulus. And we're seeing the US dollar fall because they're just creating more and more money. And when you create more of something versus something else, the value of that falls. It's basic supply and demand, economic sort of stuff. Correct?
Yes, correct.
So you're watching euro dollar, and what we have is euro, which has put in a lower percentage rally versus the United States. But what do you think the chances are that the European Union comes to the table in the next month or 2 months and drops that from 4.3 and pushes it out to 8, 9, 10%?
Well, I think we still have room. I think we still have a room for growth. Like if you can actually look at the euro dollars charts, like on a technical perspective, and that's where I think the benefits of the technicals come in. So I'm going to share the euro dollar chart.
Fantastic.
Okay. Yes, and of course that's that little pause there where I figure out which screen to share, and it will be this one. Okay, so if we look at the euro dollar, I think this is where the benefits of using technicals come in as well. And you can see that on the weekly time frame, this is the euro dollar on a weekly, and I zoomed it out a little bit. Okay, you can see this really interesting, I think this really interesting area over here. If you have looked at it, it's since 2008 till now. So we're talking about almost 10 over years of price. I think there is still a lot of room if it can just break above here on a technical level. So again, I'm zooming out a lot more. You can see the euro, it's been really soft for quite some time over the past couple of years, but it does seem to be gaining strength. And on the technical analysis point, it does have room to grow if it can break above this area. So I am looking for opportunities over the medium to long term, unless something funky comes up, but this is the potential movement of euro dollar. Yeah.
Sounds cool, Alexis. Hey, Gary asked why Germany and France are separate on the table. Are they showing separately and combined because of the size of them?
Yes, they are shown separately and combined because of the size. In the European Union, Germany is the biggest in terms of GDP size. I think France is second, Italy is third.
Okay.
Yeah.
Someone's asked if you can include the link source to the stimulus percentage of GDP. I think it'd be really good, Alexis, when you come on, if you can share. I saw you were on Fred for some of that.
Yes, I'm on Fred.
Some of that data. So a lot of that stuff comes off Fred. But if you could share a link where they can find that stuff, I think they'd really enjoy it. It's great to have you in the show.
All right, so I'll post the links in the chat box.
That would be wonderful. Thank you for that, guys. I've got I've got 5 minutes before Julian joins us. I'm just going to do a quick, I'm going to get run through and check there's not sitting in the attendee list waiting to get in. EFG, HIJ, no. Doesn't look like it. Cool. So it's not far away, guys. Do you have any questions before we go to Julian? Otherwise, I will probably get Angie to pop in and talk gold. Actually, I might just ask the team who's in the room. One of the things that Zoom also does is move us all over the place with people. Okay, guys, week ahead. What do we got? Ainsley?
Hi there, Paul. How are you?
Angie, I'm pretty good. Yeah, got to say, it's been another full-on weekend. We had an event for online trading profits yesterday, and we did that, and then popped down to the rugby for the day. Had some family stuff today, so been busy. Looking forward to Monday and getting back to work. It's easier than some of this stuff.
A break from all the work. Yeah, I can hear. Yeah, no, I've had I think I've had a really good, good week on gold market. We got to 2,000. We're obviously well above that now, but that was my target. That was my game plan, and that was where I was heading for. And that was what I was looking to get. And that came about very early hours of Wednesday morning, around 2 a.m. Sydney time. So I took profit at that level because I was really nervous about coming into 2,000. Just being that big round horrendous number that everybody had in mind. It was also a case of thanks Lexi, what to do, where we're going, what would happen at 2,000. And having been in that trade for quite some time, I wasn't prepared to risk what might happen at 2,000. I was prepared to take my profits, take it off the table, book it, and then go back through the process of analysing what was happening with the market and how it responded to that level. So it hit 2,000. I went screaming through. It had a high of 2075. And then we had non-farm payrolls where, look, I've got to say it was interesting because the numbers, whilst they were still bad, were well received. And the US dollar, as we've just been talking about, had actually taken off and gold retraced. So we had quite a heavy retracement on that. If you could pop down to a 4-hourly chart, Lexi, if that you can do that.
We'll get into real gold analysis in your session. I just really want to, and I appreciate you doing this, but look, I think one of the things that people really want to know is the difference between them and professional traders. And one of the things I really liked about your trade was that you just had a plan and stuck to your plan, right? 2,000 was your target, and at 2,000 you left, right? And then you take a breather, sleep a bit at night because you haven't slept much in the last few days. And let's remember, we're not talking about being up $400. We're talking about being up $150,000 at this stage. And why the hell wouldn't you bank some money? I think most people would bank some money around that kind of thing. But this psychology thing, this ability to stay with your plan and be consistent and do what you're supposed to do, it separates out professional traders from amateur traders, doesn't it?
I'm going to say it does, because having a plan, and I know I get boring about having a trading plan, and anybody who sat through my sessions was like, have a trading plan and have your risk management plan. Know what you're going to do before you get into the game is so important, because you've got a clear idea of what you want to do. And you've heard me over the last couple of weeks as it's got to certain levels.
This is the thing, right? You're right? It's boring, right? No one wants to hear it.
Nobody wants to hear it. They just want to go, hey, let's go make money.
People who make money do, right? And that the thing that people miss is that trading profitably is boring. It's not super exciting. It's it's about waiting and letting stuff unfold and not being swept up in the emotion of a moment and making mistakes.
Yeah, it's just one of those. You just work through your plan, And if you see the setup, if you don't know what you're doing before you go in, how the heck are you going to know what you're going to do when you're under a lot of pressure? And you've heard me a couple of times over the week, and you know I've got a bit nervous around certain levels. It's like, oh, should I book it? And I was just like, I've had to sit back and go, nope, that's not my plan. My plan was to get to this level with everything I'd researched. Yes, be adaptable and not be still looking for $10,000, 10,000 on gold when, you know, it's clearly reversing and the world's turned upside down. That's one thing. But I stuck to it. Nothing had changed with the indicators and the plan to close the trade out, and
Look,
just sticking through it.
I want to pick this up for a second, because I think one of the things that people don't understand is this, right? If you're watching a market live and you're making decisions and it goes wrong, then internally that comes back to you as your mistake. And if you're trading a plan and you trade that plan properly and things don't work out, you can take one step away from the decision and say, it's the plan that didn't work and not me. And you can review a plan from a distance and without emotion. And you can't do that. You don't have the same perspective on yourself. So when you go, this is my plan and that's what I'm doing, it's not working, I can fix it. That's so much more easy than saying, I'm trading this and I'm making mistakes and I don't have a clue how to fix that.
That's right.
So plan puts another party in here for you. Hey, Ravinda, how you doing? Oh, look, I'll ask you that. Hey, Ravinda, I do want to have a chat with you during the week. Can you Skype me as well? I think Ravinda was saying last week he's up $7,000. Someone should probably jump out of whatever they are doing. Who's sharing that screen? What are we doing, Lexi? Are we meant to be sharing that?
That was interesting.
Lexi, are you trying to share that, or was that a little you forgot you were sharing? Look, Ravinda is saying that gold bounced back to 230 level. I feel this is becoming a support area for shooting up to 2,075. We'll get into that in a little bit more detail. Alexa, you okay? We'll get into that in a bit more detail when we get into the gold section a bit later on. Really, at the moment, we're just having a chat while we wait for Julian to join us. Jeff, you're another one, aren't you? That you have a really you have a trading plan and you stick to your plan.
Well, I think it's like everything else. If you're going to, let's say, a place unknown. Let's say I went to New Zealand, for instance,
Lucky
and
man.
I wanted to go to Lake, what's it, Wanaka.
Wanaka.
And I left, and I left Wellington.
Yep.
And I've never been there before. I was about to swear, but how the heck
That's it.
do you get from there? If you don't know? So you've got to have what do they call them these days? Google Maps or whatever.
For GPS, right? Or you come and see me, and we go through it before you leave, right?
All of that stuff.
One of my mates lives in Wanaka, gorgeous place, just beautiful.
It is lovely. We spent a couple of weeks there, as you know, a few years ago. But if you haven't got that roadmap in your head, and Google Maps helps, of course. But if you haven't got that, how the heck are you going to get from point A to point B? So that's a plan, of course. And you have to map that, and you have to follow it exactly the same as you would anything else. Nothing else works.
But I'm just going to share a chart here.
The rest is guesswork, isn't it?
This is
You're
bouncing
guessing.
around with cameras and all kinds of people. Well, what the rest is, and one of the things that people ask me, I think most often, I'm supposed to be sharing a screen here, so let's come back. Yep, here we go. Look, one of the things people ask me most often about trading is how do you become more consistent? How do you get more consistent results? And the way you get more consistent results is by acting more consistently, and that requires a plan, because people are not consistent. People make all kinds of off-the-cuff, crazy decisions as they go along. And having a plan and sticking to your plan is how you become consistent. Do the same thing every time and understand what your plan is. And look, no plan works in every market. And, you've got to accept sometimes your plan won't work.
Sure.
I have a question somewhere about how you create a decent plan. And look, Angie's run 2 or 3 programs for us talking about trading plans. And we'll run another one with her, no doubt, not far away. But literally the key to writing a trading plan is just to work out what you're going to do and to write it down. And on the weekends when the market's closed, to review it and see where you're going to go. Right, I am just going to have another quick check through for Julian, see if he is tucked away somewhere. or not. We're going to get to him. I know he has told us he's coming. We do have a message from him saying he's on his way. I'm just not sure if he's stuck in as an attendee and needs to be done. If he isn't, I think we will go to Ainsley and do a full gold cross. I don't think I want to wait too much longer. You can't see him at this point.
Playing night golf? You got night golf in Auckland or not?
Look, I'm going to stay on this question for a while. We do have night golf. We do have night golf, Jeff. It's just it's really difficult to find the ball. Would love to understand on silver as well. XAG USD. I booked 2K profit on the entered using nice 1 hour chart, 22 around 29.25. But I see this have potential to go to 35, good risk level. Look, we had some input from Justin today, and he's going to text into the trading group, and he's of the opinion that silver should eventually equal the percentage move as in gold. Not go up $100 when it goes up 100 because they're not at the same place, but percentage wise, he thinks silver's lagging. He thinks there's an opportunity in silver. So I do agree. We haven't had a chance to have a look at 35 as it was just a level on silver, but we might try and get to silver a bit as we go along. Guys, we've got great numbers in YouTube, great numbers in Zoom. We've got people watching us on Actions to Wealth Facebook. I can see we've got a few in there. We've got a few on Online Trading Profits. Apparently, we've got a few on Twitter. We've got a few on my personal Facebook. It is great to have you guys all along. We will get to Julian and get into the market any second now. In the meantime, Ainsley, I think it is time. Let's do the gold cross now. We can always do a summary of it later on. Okay.
No problem. You'd be so good to put a gold chart up, please, Paul.
No problems. Look,
My favorite.
It's a great question, isn't it, Ainsley? And look, one of the things that we talked about, you and I talked about a few weeks ago, and I hope guys got into this right. That was gold was bouncing off weekly pivot, and that if you were if you were looking for a way to get in, that was your way to get in. Just wait and let it bounce off weekly pivot. And I'm just trying to work out whether I've got the right stuff on this version. Unfortunately, I have a lot of different stuff, and I don't think I have it on this. But gold on the 4 hourly chart came and bounced off last week. It bounced off this week's weekly pivot, which wouldn't have been printed, but it was the last two bars. And it's going to be an interesting thing, Ainsley. Do you think we're close to the rallying to the bounce point or not?
Could we go down to a 4 hourly chart, please?
Certainly can.
Because that's where I do all my analysis. So there we go. Click. Because one of the things we did talk about last week is that we had it doesn't get much more textbook than that, does it? That there is an ascending triangle from last week after the initial hit of 1980, huge retracement. And then we had this ascending triangle with it all hitting the beautiful technical, bouncing off the 50 EMA the whole way. And then we had a few more retracements in there and backwards and forwards. And then bang. And if I was looking at my ADX and my MACD indicator, that Monday and into Tuesday, I was looking at, look at that. It was getting really pointy at that stage.
It got a long way in, didn't it? For students of trading, often with these kind of things, and I haven't drawn it very accurately, we're looking for about 2/3 in for a break. And this got a long way in before it went, right?
Really pointy nose there, which is a little unusual, but what we saw there was the power of how that actually just flicked right straight out of there, and there was no coming back. Once it got out of that triangle, she was gone, absolutely flying. And as I said, we got to 2000 around 2 a.m. on Wednesday morning Sydney time. I'm going to say once I closed my trade and was feeling quite okay with my decision, and I tried to go to sleep, and all I could see was the flashing numbers of my trading platform for about an hour and a half after that. But hey, it was worth it at the end.
Ainsley, can I ask you a question, please?
Yeah, sure.
Why did you stay up till 2 a.m.? Why haven't you got a target set at 2000?
I'll tell you why. Because I don't trust my broker. There you go.
Because 1999.99 is starting to get. Let's get out of it. Is that
It was- It was
I
one
just
of
go
those
on
things.
record, guys, just when you say that, Angel, because I think it's really important, and you have every reason to not trust your broker. They are a disgrace. But
Yeah.
they're not the brokers that we use. It's not Fusion or IFS Markets.
It's not. Yeah, absolutely not. And one of the reasons I haven't done a changeover is because I've had open trades for such a long time, for quite some time. And for me, locking in a target, I was worried. As I said previously, I didn't know what was going to happen. It was an all-time high at 2000. It was a big round number. I didn't know whether we were going to see something typical like we saw at the beginning of the previous week, where it hit 1980 and we dropped $80. I've been in since my first position I took on this, and I scaled into this position, was at 1730. I did not want to, for the sake of a couple of dollars, or have my spread widened, or any other tricks that they are now for doing. I didn't want to miss that trade being closed. I wanted to get to clip as close to the docket as I could, and then put it to bed. So how many times have I scaled in, Robert? How many positions? I started with 3, and then I actually tipped myself into a 4th one. Yeah.
Sorry
So
about
that-
it, mate.
So that's what I did, Jeff, and that's why I didn't put a target in. And
that's
that
the
was
answer I
plan.
expected. Thanks. All good.
Yeah, just I'm not very trusting.
Look, Angel,
What can I
Julian,
say?
come in the room. Let's go to Julian and we'll come back and we'll finish gold when we've got through our forecasted pairs with him, or 4 topics with him. Julian, welcome along. How you doing?
Hey, Paul. Hi, everyone. How are we all?
Hi, good, thanks, Jules.
Leave that chart up. I think it's a good chart. If you wouldn't mind just making it, this is a little bit too short a time frame for me. If you wouldn't mind just making it a weekly chart, I'd appreciate that. So I'm going to start with an anecdote. Actually, I'll tell you what we're going to do. I'll start with what I'm going to talk about today. What I'm going to talk about is my general context about where I feel markets are at the moment. And then we'll try and be a little bit more specific about trying to think about how we're going to trade this going forward for the next few days. So I'll start with the anecdote. The anecdote was I went to a broker evening about 3 or 4 days ago on Tuesday. And the boss of the brokerage, we were chatting because we're quite good friends. And we were chatting, and he said to me that pretty much all of his foreign exchange clients have stopped trading foreign exchange and now will trade gold. So I said to him, so now they all trade gold when gold is at $2,000 an ounce. I don't recall them ever. Was the same thing true when gold was $1,100 an ounce? And he started laughing and said, well, no, of course not, because it wasn't popular back then. So one of the really interesting things contextually is that when everybody runs to one side of the boat, I start to get really interested in that particular market, because it suggests that there's a opportunity for what may be a very high reward to risk potential reversal trade. So what I've been looking for the past 3 or 4 weeks is not what's been happening, but what's going to happen. And I absolutely get the breakout. It clearly is an uptrend, and I've been part of that as well too in some of my trading and my thinking. I think I've got to revise my expectations based upon the fact that possibly this is a shoe shine boy moment. Now, does that mean to say that I'm getting bearish of gold forever? No. Does it mean to say that if you look at all the previous rallies that gold has had over the course of the last 40 to 50 years, in terms of explosive breakout moves, we're average for time, but we've done better in percentage terms than pretty much all of them. So what that tells me from a cycle perspective is that we're due for something to change. Now, when that has happened, the corrective element here is normally quite strong, and it's not unusual to find a correction which may go 20%. That means, as I'm sure you guys are aware, that there's potential here for a $400 decline back to, I guess, somewhere in the $1,600 mark as a potential area. I would use that as a buy point because I'm still quite bullish on gold long term. But as everybody knows, this is like a broken record now for the last 2 years I've been. But I do feel that we're getting close to the end of what is this most recent move. Now, that doesn't mean to say that we go, let's all go out and sell it on Monday morning. That isn't what I'm talking about. What I'm talking about contextually is there's something going on in gold that means time's up. Now, when I look at the dollar index as well too, and I look at the euro and the commitment of traders report and some of the sentiment in that as well too, trying to find a bear on the euro is really hard. I know that one or two of the traders here are starting to question the bull run here. But generally speaking out there's a lot of bullish sentiment towards the euro. There's tremendous bearish sentiment towards the dollar index. And I don't think anybody would criticize the EU if you said I'm bullish on Aussie and bullish on Kiwi. So really the question is, if the sentiment is so one-sided right now, is there an opportunity for us to reverse it? And when we look at gold, and we look at gold, maybe if you now go down to that 4-hourly chart that Ainsley had up a second ago, Paul, if that would be possible, please. We now have a slightly different way of thinking for me in terms of the issue for me is really straightforward. If the correction comes, is it going to be a, if you like, a V-shaped or pyramid style correction where it goes up and then just utterly reverses in everybody's face? Or is it going to be a more protracted consolidation in gold and it just goes sideways for a little while? Well, I think my tentative answer to that is I suspect it's going to be more violent. And also from a seasonality perspective, gold normally is quite bullish around this time of year and through to like the end of September. But that doesn't mean to say there aren't corrections. So I would view the corrections as being quite hard and quite fast, especially given the sentiment that's out there. So, but that doesn't stop the medium-term bull picture. It also doesn't stop the medium-term bear picture all unfolding in line with what we're expecting. So for my own thesis that I'm working on at the moment, I don't believe Friday afternoon sell-off. I don't know if anybody's said that yet. I think Friday afternoon sell-offs are just rubbish. They don't really prove anything. They normally don't work, especially outside days that are created as a result of that Friday afternoon sell-off. I'd probably be a buyer on Monday morning, looking to try and make some money out of that from, if you like, an on-trend trade. And we do have that outside bar. Is that a weekly? That's a daily, right? We do have that outside bar in gold pitched up, but most of that outside bar occurred over a course of a 3 to 4 hour trading session on Friday afternoon. So am I discounting it? No. Am I saying there's something more important that could be at play here? No. Am I saying it's a buy on Monday? Probably yes. So I don't believe that outside day has the validity which you'd normally ascribe to outside days at the top of trends. Now, if you go and look at the Kiwi, please, Paul, dollar Kiwi.
Johnny, can I ask you a question?
Yep.
Can I, before we go, can I just draw this up and see if I've got this right? What we're really looking for here is, if I can make this this work. So we're looking for a move up, but then we're just looking for it to pull back and give us a higher low. We might have a little look on the downside as well, right? So it's initially up, but we're looking for not just a seller, but we're looking for some kind of confirmation of weakness to sell into, right?
Yep.
Great. Onto the Kiwi.
And if you pull up the weekly chart on the Kiwi, please.
The mighty Kiwi, the greatest currency pair of them all. Just ask Paul Hutton, he'll tell you, he agrees.
Let's start with a weekly for our analysis. Well, this has put a ringed high in place on the weekly, right?
Yeah, look, interesting too. And look, I wouldn't mind blowing up and have a look at this, but and I know that people use different things, but it's, I'm going to call that, and this is a little controversial, but I'm going to call that this has put a ring high and bouncing off the 200-day moving average. And I know it doesn't touch it, but I'm going to suggest that in a non-centralized market that's close enough to suggest that it's touched it on somebody's brokerage. Interesting place for a move down.
Yeah, and then if you put the daily chart up, Paul, you can see how this week the Kiwi has. You might need to squash it. Thank you. That's perfect. You can see how the Kiwi put an initial top in place. Was that last week? No, that'd been the week before, Friday the week before. That put initial top in place there on that bar. Yep, and then we spent the most of last week working our way back towards that high and then rejected it. So that to me is a sign that possibly there's something going on. In other words, it rejected the retest of the highs, and now there may be a new trend beginning to start. So that's one of the clearer examples of what the context is that I'm talking about here. If you also look around the other markets, so for instance, copper had a terrible day on Friday. There were a number of commodities that got annihilated on Friday, copper, aluminium, the list sort of goes on. You can look at a few of those, and they all had that same Friday afternoon sell-off feel about it, which again is...
What's the ticker for copper?
So it's XCU, I think it may be. XCU, there we go. Keep going down, that one.
Oh my gosh. It did have a little roll out on Friday afternoon, didn't it?
So if you then pull that out to a weekly chart, Paul, right, now you get some perspective about what's going on, right? So this is a massive uptrend in line with a restart of global demand. And now we're questioning that size of up move. We're not necessarily questioning the up move, we're questioning the size of the up move, so make it more corrective. So there's what I'm worried about, and I've probably gone over time here, so I'll stop talking now. What I'm worried about is the fact that this is the same in every single market. Doesn't that look a bit like the S&P? Doesn't that look a bit like the euro? Doesn't that look a bit like, I don't know, pick anything, the Kiwi, the Aussie? And this is copper, right? They're all the same. Guys, the whole world has the same trade on.
It's and particularly the Nasdaq as well, right? Which did the same thing really. It just started to fall. Just started to fall away a little bit.
Yeah, the Nasdaq does fit into the camp of global funny man at the moment. But yeah, so my basic thesis here is it time that we're calling an end to some of this stuff? The extreme positioning we're seeing on the commitment of traders in both the euro and the Aussie and the Kiwi and also the dollar index suggests that there's a potential reversal coming on weekly bar charts. So again, I'm not saying that it's going to go down Monday. I'm just saying you're on full alert now for potential reversal. The question in my mind is, what is that reversal going to look like, and where's it going to be the most dramatic? You know, we saw a big move in copper there. And the reason why we saw a big move in copper is that topped out first, right? So interestingly, because that's moved first, does that mean to say that other things are going to catch up? Maybe a daily chart might be a slightly better one to look at for that one. So that consolidated for 3 weeks before it began to break down. So there's your consolidation and then breakdown phase. Am I saying that that's going to happen in gold and or the euro and or the Kiwi, whatever, right? And the short answer is I don't think it is. I think there's something more violent going to happen in those. So there's my thesis. That's what I'm working on for the next couple of weeks, and we'll see how it plays out.
Julian, how do they look? How do our people look to take advantage of this? And look, let's go back onto a currency for a second and have a look at the Kiwi again. Let's go back up and have a look at that, right? So looking for New Zealand dollar, we've seen this. Look, I haven't even moved my square, but you know, it sort of basically is the same place. You know, I can.
Well, ironically, it almost is actually. It
really is, you know, and you know, so what we're seeing here is that we're seeing these consolidations, and look, you know, how do you trade these? And you know, the first thing for mine is that, you know, if I was trading this, I probably wouldn't be buying the bottom of the range and going to the top anymore. I'd probably be selling the top of the range and coming to the bottom. I might just have a bit of a bias where I'm a bit interested on selling here, and I'm not so interested in buying down here. At the same time, what we're really looking for is this, right? We just need to see this put a lower low, pull back to a lower high, and this goes from being a thesis to something that's actionable. Until then, it's as you keep calling it your thesis for the week, right? You're not going to do anything with this until the chart tells you you're right?
No, exactly. So if you go down to a 240-minute bar, actually even an hourly chart on that, an hourly chart, but a 4-hourly chart might be better, actually. Sorry, let's try 4-hourly. Okay, here we go. So
decent size for early bar, isn't it?
Yeah. So let's say, right, that until proved otherwise, this is the new trend.
Yep.
So then it's a question of how do we trade the retracement, because we know that Friday afternoon bollocks usually gets waxed on Monday, right? So if this is and I apologize for my language, everybody. If this is a Friday afternoon rubbish trade, then we will have the opportunity to be able to put short positions on at better levels than where the market closed out on Friday.
Yeah.
So then the question that we have is to figure out what those levels are. Now, it doesn't take a thank you, Helen. I'm not sure that YouTube sometimes agrees with us. So the issue in my mind is somewhere in here is going to be the next sell. The question is where. So it wouldn't be unreasonable if you could draw some support lines, probably around about, or resistance lines around about 66.30 would be a good starting point. And as I say to people all the time with this, if you keep going back 66.30, right? So there we go. That's quite important. Maybe a little bit lower than that, a little bit higher than that. So somewhere between 66.20 and 66.40 is a level at which you're going to want to think of. Exactly, you're going to want to think about participating, right? Where you manage the risk is, you say, if we get above 66.50, something like that, that may be a point at which I question my short-term sell idea for this particular trade.
Oh, so we've had a so we're going to open the we're going to open the week on monthly pivot, and you know, I think every chance here, they just say Friday bollocks will be done, and we'll be bouncing back up into these areas, and then looking for some price action here that encourages us to make a decision. And if we get the right price action, look, it's 1%. Don't risk 10% on it, but you know, see if we can find a way in. One of the things about moves you're talking about here, Julian, these could be temporary corrections. These could be quite big moves, and I think one of the things for new traders to understand is that you don't have to rush risk into big moves. You didn't have to get gold at 1600. You just had to get gold on the way. You don't have to rush into this stuff. You can take your time and let these pictures get clearer, and you know, and take positions along the journey. You don't have to be at the start, right?
Yeah, 100%. And look, yes, Paul, exactly. And Helen's raised a really interesting issue, which sort of answers the question as well. Right, so there's two things you've got to understand here, Helen, is that I'm moving across time frames in my conversation. So, Paul, if you wouldn't mind putting the gold chart up again. You know, I will not take a selling gold that I'm looking for a $200 move on based on an hourly chart. That doesn't make any sense at all, right? Well, it does, I guess, if the volatility is high enough, but it isn't. We haven't got that sort of crazy volatility here. So if we're going to have a correction, the average correction, given the distance that we've traveled, right? The average correction is around about 20%. I would expect that to happen between now and December. Okay, that's quite a long time away, right? So when I say, what does violent mean, or you ask me what violent means, my worry and my worry wart to all of this is there's so much sentiment right now in the gold market, so much sentiment that this could be a very violent and fast correction, just because nobody is bearish. And so therefore it keeps going down and down and down and down and down. And every time people try and buy it, which is what they've done in the past, they get stopped out again and again and again until they figure out that it's actually a downtrend now. So our job as traders is to try and look for a change of state. Now, when that normally tends to happen these days, people's opinion is so, the sentiment is so important at the moment that I don't think you're going to have a consolidative phase. I would really like there to be one where we go and we retest the high and we muck around. It gives us a couple of opportunities to get short and things like that. Yeah, that would be good. There'd be some warning signs in there, but I think and that would be a great way of doing it. But that would be almost too easy for the new traders who have started to trade gold. So I don't think they're going to get that. They're going to get that nice and easy place, right? So the thing for me is, and what I'm concerned about is when sentiment is so extreme as it is right now, that the corrective moves happen in a very fast way, and that's what I mean by violent.
So when we talk about Friday bollocks, Julian, what we're really saying is that late on a Friday afternoon, volume in the market can thin out a little bit. You've got people who are trying to close positions they've been in through the week. They don't want to hold them through weekends. And quite often you see a counter move at the end of a Friday, and it doesn't mean a hell of a lot at times. There's not enough volume there later Friday to really hold it together, and we don't take these moves. That if the same move happened on a Thursday or Monday, Tuesday, Wednesday, Thursday, we'd be saying, look, this is an outside day down at the top of a range, and we need to be seriously short. But because it's Friday, we go, oh, well, it's probably just a bit of market correction kind of stuff going on. Is that what you're saying?
Yeah, exactly. Friday afternoon in summertime is exactly what it is. There's nobody in the office.
Yeah, most traders on Friday afternoon are not at their desk trading. They're in a bar somewhere talking bollocks to somebody else, you know. So these markets,
Word of the day.
junior traders are the volume's down and moves can be quite quick. And a lot of position traders, a lot of funds, they don't like to hold positions over weekends. So quite often on a Friday afternoon late, you'll see an opposite move to the rest of the week, when people who have gone long just close out positions and bank some profit before they go to the weekend. Apart from anything else, it means that these guys can go away with a clear head for the weekend, not have this stuff, bubbling around in the head over the weekend. I think it's not a bad idea in today's world to close trades over weekend. Julian, is that you for today?
Yeah, pretty much, Paul.
Mate, can I just invite anyone from the team with any questions? Anyone from the team ready to check the join? Yes, Jeff.
Just the one. RBNZ on Wednesday. Cut and paste, no real surprises, and if so, what so?
You asking for our opinion on that? I think they'd like to cut interest rates to zero permanently for the next 2 years.
Okay, so that goes along with the thesis.
Those employment numbers, isn't it?
Yeah, I think there's. I've heard the talk in the market here that they want to move to negative interest rates if possible, but they can't do it because one of the banks hasn't got the systems to do it, and they're trying to fix that. So they can't move interest rates into negative territory if required. So they'll be stuck at zero for longer.
Wow. Okay. The initial is is more complex than the afterthought.
The thing with that, Jeff, is that if they do that, then we're looking to the topping out of the Kiwi dollar really supported. That's a view that's held by a few people. Someone somewhere is tipping that the RBNZ at some point is going to get a bit more bearish on interest rates. Fascinating stuff for me. Somebody who lives here. I'm it's a place that's pretty busy in New Zealand. Gosh, I do want to appreciate the question, Jeff. I do want to just pass on to the people around the rest of the world listen to this. As somebody who lives in New Zealand, I really hope the New Zealand example is what's coming for you guys. Since COVID has left these shores, money has come flying into businesses. People are shopping local, people are traveling local, and people are spending money in ways I don't think we've seen in New Zealand for a little while. I think they're actually, in a way, New Zealand talks about the team of 5 million who did the hardest quarantine I've ever seen. People talk about quarantine. When they tell us about their quarantine, I laugh. So that's not what we did here. We just didn't go anywhere but the supermarket. It was different. But not only that, but the team of 5 million is now consciously outspending money to try and support the economy. It's quite an interesting thing to watch. And there may be some good news coming out of this for countries that might be a little bit better than people are expecting, I hope. I can't say that's an economic opinion, but it's certainly a hope of what we're seeing from here. One final thought, Julian, anything from you?
Yeah, just to answer Helen's question, if I may be so bold on this, I think there is a point at which private traders feel they're always on the outside looking in. And can I just say that the concept of this being some kind of pre-planned institutional dump on gold on Friday is, I don't quite understand that question. And I often see these things and I hear words like manipulation and I hear other things like that. And honestly, in 95% of the markets that we trade out there, no one individual organization is sufficiently large enough to have any material difference. Short term, they may be able to impact the price over the course of an hour or so, but realistically in something like gold or definitely in any of the foreign exchange markets, to imply that where one organization has any type of significant influence is just not true at all. The volumes are way, 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 way bigger. And quite frankly, there's a lot of rules in place that prevent people from doing that.
Look, there's always, as long as you're in the game, there'll be a conspiracy theory around. And look, in my opinion, and this is only my opinion, but as a trader, you need to ignore that stuff and focus on the charts and making good decisions, because even if you're right, you can't do anything about it, and you're probably not, and the market will just behave in the way it behaves, and you just need to be, get on with that,
Yeah, and look, there's a lot of people go, oh, the Fed's defending the stock market and stuff like that. Seriously, the Fed can't buy stocks. And it's like what the Fed can do and has been doing, and the reason why the stock market has been rallying so much in specifically the US over the course of the last 6 months, since March, is the Fed has been buying all the junk bonds of the companies that are on the stock market.
Yeah.
And if you buy those bonds and you guarantee the maturity cycle because you're buying those bonds, right? And so you're buying them at whatever price they are, and you're going to hold them to maturity, in which case that company is going to be good on the debt, right? Then why wouldn't the share price go up? Because that's the last leverage point in the capital structure of the firm. That's pretty straightforward. And what the Fed is also doing in buying those assets, be they bonds or be they mortgage REITs or whatever the hell else they happen to buy, when they're buying all of those things, what they're doing is they're crushing volatility. And a decline in volatility means that most asset allocation firms, because of the way in which they run their risk parity allocation on the vast majority of their funds, means the lower the volatility in that particular market sector, the more they have to buy of it. So as volatility falls out of the market, more people have to come in to buy. And so that creates the run on the way up, and it also creates the fall on the way down. So as volatility rises, then people are forced to allocate away from that asset class as well too. That's why we have under and overshooting. So when you just see the stock market rising and rising and rising, and you're scratching your head going, it makes no sense economically for this to be happening. Just remember, sometimes the stock market is divorced from what's going on economically. This happens from time to time. This is another one of those events when it's happening, right? We're in the midst of a bubble, and that bubble is in stocks. If you don't understand that we're in a bubble, then please go and look at that NASDAQ chart that Paul maybe had up earlier, which says we've gone up nearly 100% since March. If you can't tell me that since the bottom of the market in March and now 4 months later that the world is in a better place outside, it's got nothing to do with that, and got everything to do with the fact the Fed is selling volatility. And that's maybe a conspiracy or not, but it's just a fact, right? And that's just what's happening. When you sort of get that, then it makes life a little bit easier because you understand what's going on. And interestingly enough, the NASDAQ is underperforming now because the volatility in that market is the worst. If you go and look at the Dow or the S&P over the course of the last few weeks, Paul, if you keep that chart and then look at the Dow and the S&P, you'll see how volatility has exited the market and it's got a little bit quieter. What one's that one? Is that the Dow?
Yeah.
Yeah, there's lots of open and closes together, right? Lots of times when the market hasn't done much during that week. And so, and with the same with the S&P as well too, right? The volatility is coming out of the market and therefore people buy more of it. And that's really what's going on.
Julian, can I jump in for a second here?
Sure.
Couple things to Tom. So, look, if you find the economics of this to be overwhelming, then just listen for a little while to the show, and then the stuff will get clearer and clearer for you guys. We talked about the volatility stuff 2 or 3 times in the last couple of months. We've talked about how it's affecting people buying and selling the S&P. Just a quick comment on the economics for mine, and I do need to move along, but for me, the best thing a central bank can do at the moment is buy company debt, because the whole notion where the Reserve Bank lends the money to the government and the government may or may not pay it back, that's got no wheels. They can't work long term. But if you're buying corporate bonds, eventually that money does get paid back, and it's a far safer intervention from a central bank than what they're doing with standard quantitative easing. So I think it's New Zealand, the Reserve Bank of New Zealand is doing it, and I think that's the right way to do it, is actually just to come into these markets and to stabilise these companies by buying their debts. And because that is going to get repaid.
Yeah, exactly, Paul. And look, just taking that a stage further, just bear in mind that there is not a single economist out there who has any idea what's going on.
Oh.
Right? This is a new brand of economics that we're experiencing now, right? This is the economics where debt is now so overwhelming, but they're going to continue to expand it. That, yeah, you could argue eventually something has to break. We all get that. But the point is trying to make good economic analysis in here and tie stock markets to the economy and things like that. It just doesn't make any sense. And it hasn't made any sense for a while. So this is the reason why you're seeing a lot of the sky is falling comments from economists. So one of the interesting things about the New Zealand employment numbers out this week was because they came in crazy good, right? They were like 4 or 5%, I think, versus the expectations of 8%, which were ridiculous. That's like a miss by 3%, okay? Economists can't possibly miss that far, right? Everybody got it wrong. And why did they get it wrong? Now, there may be some technicals as to why they got it wrong. And even one of the economists said, well, it doesn't matter because I'm going to be right eventually on this. I'm going, well, hang on a second. You called for the sky to fall and it isn't falling. So maybe you need to think about it in a different way, right? And maybe you need to think about, well, maybe this has worked. But again, because it doesn't fit their economic models, then people get nervous about it. And that's part of the problem, right? There is no model out there that's going to tell you what the answer is right now, because this is the biggest shutdown in output that the world's ever experienced, short of a war. So to try and say that I understand what's happening is ridiculous. And nobody does. So you just then work your way backwards to say, I'll tell you what we'll do here is that we'll trade the price action and we'll try and trade it as we see it. And that's why I'm interested in maybe a potential reversal coming up over the next few weeks, regardless of whatever happens to the economy. I suspect the economies of the world might well get better. And as a result of that, the stock market may go down. Well, you try and figure that one out. Well, it's not worth it. So why worry?
Right, yeah, guys. Julian, thank you very much. Look, guys, it's one of the things that we look to do is we bring different experts in, and some of the stuff I'm really interested to know whether some of it is a bit tough for new people to understand or not. But just keep listening; it'll get clearer and clearer. And look, I think it's a really good point that Julian makes. Again, I don't want to. We've got to get around everybody else as well. But I think at the moment, economists are trying to make stuff up to make themselves feel relevant because really they don't know, and no one knows. And we all have opinions, but no one knows. And again, will there be some conspiracy theories out there in the next 2 or 3 years? One thing I will agree, I think you said this as well, Julian, that right now is the time when governments and reserve banks have to be doing this.
Yeah, totally.
Whether it's right or wrong, right now they've got to try it, because if they don't try it, we're going back to the 1930s. And that is not an option for us. You know?
No, don't get me wrong on this. There's absolutely, I'm the most liberal market, one of the most liberal market people you're going to find. But there are times when the central banks and the governments absolutely have to do what they've done. Don't worry about what they've done. Be thankful that we have people in control and people who are running the government that actually recognise that this was a needed thing to have happen. I'm sure they've all done it wrong. I'm sure they've all got the basic gist of it dead right. But so everybody focuses on the semantics, which may be wrong at the time. But the overall thrust of what the governments have done is exactly what they should have done, given a global pandemic that, quite frankly, was handled brilliantly by Asia and handled appallingly by the rest of the world. And you've really got to wonder, the Chinese must be scratching their heads some days, wondering what the hell's going on, because they absolutely got it 110% right. They've seen it before, they reacted quickly, they locked down, and it wasn't a problem. And yet, look at what's going on elsewhere. And it's enough of a head scratcher just to listen to the headlines coming out of the States that I've now stopped doing it, because it's just hilarious. And I look at what New Zealand's done, and I'm very, very, very thankful. So, it's
that might be the only political thing we're going to say on this show about New Zealand where you and I agree. Very, very thankful. And we did have, some people did some really good stuff. Julian, I've got to move it along. As always, thank you very much. Fascinating stuff. And, I think there's some people listening to this that are listening to this and going, wow, that clears some stuff up. And there'll be some people who listen to this going, wow, that's quite deep. And it is quite deep. But it's the kind of stuff, if you're going to trade, you want to hang around and learn some more from, because, we're very lucky to have people come in and talk this kind of stuff for us and give a look at what's going on in the back rooms of all this kind of stuff. The bank in New Zealand that can't run negative interest rates, that is third world. That is not sounding quite so cool. Cheers, Fad. Thanks for the feedback, mate. Much appreciated. Rightio, we are going to go to Ping Ni and do oil. We're going to go to Ainsley and do gold. We're going to go to Lloyd for calcium strength. We're going to go Jeff and get around the calcium. We're going to go for 2 hours today. There is no question about it. I do appreciate you guys all being, and the numbers in the show today are awesome. It's great to have you guys all along. And to Jordan, that was a brilliant session. I am sorry to have to cut it off here. I guess the point for me is that I could sit here and talk about it for the next 2 hours, but we should move it along. Ping Ni, are you with us?
Actually, can I interrupt for 2 seconds? Can
Yeah,
we
mate.
bring this to the table at some stage? We're all talking about the current situation, but there are deeper things going on that I see we need to talk about. And one is a lot of people are talking about, economists included, are talking about the US dollar is no longer the reserve currency as of question mark, question mark, question mark. The other one is, are we going to cryptocurrencies as a substitute for that, or what is the new reserve currency? And I don't want to talk about it now, but I think it's a great topic to discuss at some stage.
Jeff, certainly time for that is not here. But look, if you want to check that out, you go and see what gold's valued in. And as long as it's US dollars, they're talking crap. And I know it's exciting and I know it gets headlines, but the reserve currency of the world right now is the US dollar, because that's what we use to buy everything. And there's no sign of that changing, and it certainly won't be changing for cryptocurrency. Or there's no sign of that in the real world. And there's always people who have these views and they float them around. And look, there's been so many of these different things, and I just don't want to get into that right now because we are really late, and I want to get into other stuff. But
I said not now.
I think some of that stuff again is just Look, one of the I've got lots of guys stuff coming in, guys. Some brilliant comments, guys. Really appreciate them. And Julian's gone. It's late in New Zealand. He might have gone to get some sleep, but I will pass them on to him. So thank you very much. And I'm happy to talk about all this stuff, but I think one of the things we do want to do is separate out the economics from the conspiracy stuff and spend a little time on the conspiracy stuff and as much time as we can on the real stuff and the stuff that drives foreign exchange markets. Central bank actions are what we've been talking about, and that's really what drives what drives currency prices. And that's really what we're all about. And we'll pick the rest up as we go along. Ping, are you still with me?
Yes, hi.
Hi, how are you?
I'm doing great. I'm waiting for my dinner.
Mate, I'm sorry to keep you waiting. We do try and keep these things a balance between keeping on time and trying to make them as good as we possibly can. Mate, are you going to share your screen today, or are you going to use mine?
Yeah, I'm okay to take over the screen.
Fantastic, mate. Let's hear what you're going to say about oil. As Pingley takes over the screen, he's a young trader. He's off the Platinum program with us, been with us for about 2 years now, up 70% in the last 3 months on oil. He's a specialist oil trader nowadays. A student who's on holiday, so trading close to full time while he goes through this process. And we thought we'd bring him along to share a bit of stuff. Pingley, you got the chart. There you go, mate.
Yeah, I don't know how to share my screen. Now, okay.
You okay?
Are you looking at my screen now?
We can see your screen just fine, mate. Yep.
Okay, this is my first time doing this.
Yeah, look, no one minds, mate. Honestly, everyone who's here is just keen to hear what you've got to say, mate. Don't worry too much about the little stuff. People in the room aren't going to be worried about it at all.
Okay, so let's go into talking about my favorite liquid.
So we're on WTI at this point, Pingley?
Yes, we are on XTI.
Yeah.
So let's talk about what I'm going to do for next week. So basically, for now, you can see it's a retracement for this uptrend, but I'm still leaning to the uptrend for next week after it's done with its retracement. So I am waiting for more. Wait, how do I get the pen to come out? Okay.
Mate, for drawing, if you just go to annotate, if you go to the bar at the top, it'll give you annotate, and then there you go. You should be able to change the color if you want it. Okay.
Okay, so I'm waiting for this slowly to come down back into this area. This area here is about the 40 region. If we manage to break through, and I will wait for another entry at this area. So if we manage to break through again, I will stop and see where will it go before I will waiting for my next entry. So basically for this point, I will waiting for entry at this 40 area, waiting for some retest at these pivots and this last bottom area. Okay, that's it for what I'm going to anticipate for next week.
So Pingley, right now you're bearish on oil, right? I think it's going to go down.
Yes.
And you're going to leave it now until it comes down to monthly and weekly pivot. And when it comes down to monthly and weekly pivot, you're going to look, if we get a break below that, to trade it short.
Yes. So for oil, basically, what I understand so fast after my 2 years of interacting with this. So you may look at this. This is the 1 hour chart. So you can see clearly is the uptrend from this area.
Okay, got it.
Where? My God, where's the pen again? Okay. You can see this uptrend. After that, you can see this is the retracement for this 1 hour chart. So it doesn't mean it will be going back to downtrend once you break this area, because when you flip to 4 hour chart, you flip to 4 hour chart, you can see that it is still an retracement ongoing for this 4 hour chart. So basically what I can say, or what I can anticipate, is bounce off of this area. And when you go into the daily chart, you can look after, when this is where I'm anticipate to go for a long, which is the retracement ending for the 4 hour chart, this part. So what if there's a breakthrough for this 40 area zone, a region, you can consider it is a retracement for this daily chart area. So what you can do is wait for at this area. So I'm not able to predict, but this is what I'm going to do when this happens. Yeah. So for oil, it doesn't mean it's going down means it's a downtrend. It may be just retracement for this 1 hour, 4 hour of the daily charts.
Look, while you're doing this, Pingley, you talked last week about trading the oil back to daily pivot every day. Are you still going to do that while you're waiting for this to unfold?
For now, I can see it's not actually a ranging, where this ranging technique is not suitable, because when you look at this 1 hour chart, you can see it's a clearly
it's breaking out, right?
Yes. What did I say? What I mentioned last week is not going to happen. It's not going to follow this one. It might retest of the pivots. And for on Monday, the pivots is daily pivot is at this 41.5 area. So it will most likely will do this when we reach this region.
Okay. Cheers, Pingley. Thank you very much. Guys, I got a lot of questions across all the different platforms at the moment. I've tried to get as many as I can through each other. I thought it was awesome tonight. And look, it's really great to have that kind of stuff. We will get them back on the second Sunday of next month and have another crack and talk some more about them. Pingley, thank you very much. Time for us to get into Ainsley and have another look at gold. We did start it earlier on, but Ainsley, where are we for gold the week coming?
And I'll take myself off mute. There we go. That'll help. Have you got a chart there, Paul?
Yep. Hang on a second, Ainsley. I'm just trying to send Julian a message and thank him for a session. There we go. Are we?
Yeah. Very grateful, very appreciative.
Look, it's nice to see
out there, isn't it? Good.
Yeah, it's nice to see some really positive feedback from the group about it as well. It's one of those things where I'm always worried about some of the stuff going over the head of some of the people in the room. No disrespect to the people in the room. You're talking about it to a man who really knows his stuff in depth. And I thought today did a really good job of keeping it really relevant. And I think people really enjoyed it. I think I'm really pleased with it as a session. I do love getting him back. We're very lucky that he turns up most weeks and pops in for a few minutes. Here is gold on the weekly chart. Ainsley, is that what you're looking for?
Yeah, my beloved work, gold. As we, and it was funny because Julian and I were texting during the week about gold, and I said I'd booked it, and then we're looking at it coming up above 2,000, and then we started to say, there's a lot of smaller bars happening on the 4-hourly chart, and look, everybody's long gold, and we were just talking about it, it's probably ready for a bit of a retracement. Ta-da! Retracement. Now, what? And to me, for me to get back in, that is not a setup that I'm looking at the moment. I need some more information. I want to see what's happening.
Can I draw this up, Ainsley, and see if I can make this a bit clearer for a few people here? See if I can. Again, feel free to jump in and
I'm
about some of the
out
stuff
at the
that Julian said. Look, when we're talking about waiting, I think what Ainsley's looking for here is higher high, higher high, higher low. We're going that way. Lower high, lower low, lower high. We're going that way, right? And if you watch the chart, will give us a picture and tell us right now what we've got isn't the same. It's really you'd say right now we are higher high, higher low, and we're looking to go that way. That would make sense technically. But this bar is the dominant bar in the game right now, and dominant bars are really important. Decisive bars, big decisive bars on Forex charts, no matter where they are on currency charts. Right now, that's the decisive bar in the game, and it tells us we need to let this get clearer for us. Just like gold put in this bar to tell us it was on its way. Big decisive bars tell us what happens. And look, gold likes to sell quickly.
Wide stops, people. Wide stops.
Well, one or the other, Angie, right? Either
it's one or the other.
One wide stops, or pull your stops up, and when it pulls back, take your money and be done with it.
Yeah, and it is with gold. You bank the profits.
Yes,
which I did, and I was pretty pleased. I'm gonna say I was pleased. I was happy.
I don't think anyone, other than winning lotto, I don't think anyone's going to be playing more. That's a great trade. Yeah, thrilled for you.
Look, I've got to say, Paul, it was. I'm just glad to know that I'm not a one-hit wonder for the year.
Yeah, look, it's one of those things, isn't it? God, people are, after the big win at Christmas, there's, can she do it again? Of course she can do it again. She's a full-time trader. She runs a fund of her own. It's only a matter of when. And can Angie make $100,000 or $200,000 every month? No, she can't, because the market won't give her that opportunity.
No, I don't see that every month.
Gives that opportunity, she can take it, right?
I'll tell you, I went in that trade. The first position I took at 17:30 was middle of June.
Yeah.
So added to it, watched it, held it, got nervous, got sick of it, held it, stuck to the game plan, as we said earlier.
Look,
and
Helen,
a lot of anxiety there.
If you're not a professional trader, trading a 1 hour chart on gold is not a long-term answer for you. I really encourage you to get out of 1 hour charts and get out of the detail stuff, because the move on gold is too big.
It's too much noise. There is too much noise on the hourly chart, and Helen, I just can't go down there. We were doing it the other night on the, Jeff had a 30-minute chart up. I was nearly having heart palpitations because I couldn't digest the information. And I'm just used to, with gold, because it moves so much, processing the information that I see up on from a 4 hourly. As we said, I need that for processing information for looking for my entries, because when it's on a tear, it's on a rip, it will come back and it will test those levels, and it keeps looking for the weekly pivot and the monthly pivot and all those other levels. And that's why I need that 4 hourly chart to see where it comes back to, so I can get into that next position. But stick to the dailies. But yeah, for a 1 hourly on gold, it moves too much, and I'm telling people to put wide stops on, and I'm doing 4 hourly and daily charts. So I just can't. That's the way I have worked out my trading plan for that.
So sorry, Ainsley, gold in the week ahead, we are looking for clarity in the start of the week, and look to build into positions later in the week as we get that clarity.
Correct. Yes, absolutely.
I talked in the update a couple of weeks ago about gold being a buy and hold for non-professional traders. That if you're just in it and you don't really have a lot of skill, and I don't mean for that to sound negative. It's not meant to be negative, but if this is what you do for a living, then, you know, if you believe gold's going to 3,000, just buy and take it to 3,000. No problem with
Yeah,
that.
and ride the wave in between, because it will move around. You know, it doesn't go from 2,000 to 3,000 in a week, you know. So as you said, buy and hold. Just be prepared for the bumps along the way, because you don't know what's going to come. We're in uncharted territory, and I've been saying that for the last couple of weeks, especially as it, you know, as it hit through 1900, hit past 1921, which was the previous all-time high, and then it's hey, but you got to love those pivots. You got to just look at all those entries.
It's been great, and that's one thing that does interest me, is that this is where the daily pivot's going to be, the weekly pivot's going to be.
Weekly, yep,
Right
yeah,
there.
and it's come back down to there now. Whether, as I said, that's a decisive down bar, it is a bounce. I will need a little bit more information around that before I even take another entry. I think I've earned a little bit of a breather, and having a bit of because I've been watching this nonstop, as you know, just to have a little bit of a reprieve and go back and look at the chart with fresh eyes doesn't hurt at all.
Yeah, look,
Sometimes you just can't see the forest for the trees.
Yep. I think, gosh, that's not what I'm looking for. What's that? Markets. Okay.
So yeah,
Cheers,
go
Angie.
gold.
Look, that's one of those things I think that people really need to. Can I get? You know, I think people need to understand that this is it, right? One of the things about trading is that when you're in it, it's quite intense, and sometimes you just need to have a break and get out of it. And you know, and if you do that, freshen up and wait for the next one. And look, we don't know whether the next amazing opportunity on gold is hours, days, weeks, or months away. What we do know is that that's the next time you want to be in it, and that just being in it for the sake of being in it's no good. I really like, for mine, this whole thing about gold this week for mine, and all these charts. I like what Julian said, and what you're saying really is let's just let the market tell us. Let's not guess. Let's just let the market tell us.
Oh, absolutely. Julian's just explained, nobody knows what they're talking about at the moment. Nobody can, they try to explain what's happening out there in the market, but all you can do is look at your charts. That gives you your market price. Try and work the fundamentals that make the most sense to what you are seeing and make a decision based on that.
And look, when he says that no one knows what they're talking about, he's not being rude. We don't have a time in history where governments have printed $5 trillion and lent it to themselves. It doesn't. There's no precedent here, and that's what he's saying. We don't really know what's going to happen. We don't know if they're going to pay it back or not. I don't think they're going to pay it back. I really don't. But you know, they'll have to pay some of it back. But how this is going to play out, we just don't know. And for the meantime, we just need to look at some charts and let them play out for us. Angie, I'm going to head on to Lloyd. Last week he talked about relative currency strengths. We're going to get into that. We're going to have Jeff do 4 charts for us. We are not going to keep this to 2 hours. Oh, we have 2 hours. We'll keep it 2 hours. A long show, guys. Lots of content. I hope you're enjoying your Singapore National Day. And if you missed earlier, happy birthday, Singapore. It is cool for you guys. Lots of people in the different rooms at the moment. I can see YouTube numbers are still really good. The Facebook numbers are really good. It's nice to have people in the Zoom room as well. It's backed up in there. Thanks for joining us. Enjoy this. And let's go, Lloyd. Lloyd, what do you got?
Hi, Paul. Right, let me get the screen. Right, so I think little has changed for me since last week. Yeah, so but just that when I look at the chart nowadays, is that doesn't seem to be much have a much strong momentum of the pairs that I can keep a look up for. Let me shift this thing across.
Lloyd,
so last week I was actually.
Lloyd, your sound's been it's pretty. It seems just to come right, but the sound was pretty dodgy. Keep going. I'll let you know how it goes.
Okay. So last week I'm actually the most bullish about power, but it didn't really actually perform really well. So this week when I was looking at the chart, Swiss seems to suggest to me that it might have a better prospects. Yeah. So it has managed to keep itself above the 108 level. So let me change to the daily chart. You can see that it has made a really nice bounce off, and it's still heading to 110. Now within the same week, it bounced off the horizontal level as marked from prior, tested the 110, a little bit bearish, but we can see that overall it ended higher than where it started. So we just say that it's a higher low. So I'm still quite optimistic about Swiss gaining strength. Yeah. So let's keep a lookout for strength of Swiss for this week. Now, since pound last week, when we look at the weekly chart, you can see that it broke. It didn't have a really bullish close. Yeah, in fact, this was a high test bar. So on the daily chart, we can see that price, in fact, has tested the 130 level twice. Yeah, so Friday it tested for the second time. Yeah. So as long as it didn't break this level, I will still be rather bullish about it. Yeah, just that considering that the momentum is actually waning for the time being, even if there's a trade setup, I might not be trading at a full risk. I might reduce my risk for that. Euro overall, when you look at the weekly chart, it is still rather bullish. Yeah. So compared to last week, we do have a this is what I call an engulfing test bar, but it is to me, it's an out of context bar. Yeah, it didn't really happen at a key level, so I'm not going to pay much attention to that. Yeah, and in fact, it does have a really rather steep trend line working in its favor. Yeah, so all in all, for Euro, I'm still bullish about it. Not much changes from there. I think Aussie had a gain in strength. Yeah, so when last week, we can see that I was expecting it for it to actually fall all the way to 70 level. Yeah. So instead, it was actually hugging at this temporary horizontal level at markups. So now this is where things get interesting for me. Yeah. So price action to me, as long as it happens in the middle of nowhere, I don't really keep a track of it. But it happened at a horizontal level at markup, and from there I can see that I have a confluence of the MACD that its momentum is actually waning. This does suggest to me that the Aussie, although it had a gaining strength this week, slight gaining strength, probably wouldn't sustain through. Yeah, it might actually have a good chance of falling back to 70 level. Kiwi, as suspected from last week, it is going to be stuck in this range for quite a while. Don't believe that it will go anywhere soon for the time being. And given the this week price action, it's not so. It is a test bar, but not a rather strong one at that. So I'll leave it as it is. I'm still going to sell Kiwi. Canadian currency, again, on a weekly chart, you can see that a rather huge test bar, high test bar that occurs at the 75 level. So now Kiwi, this is one of those times where I'll be really careful about trading Kiwi because it is at a strong horizontal level. It is at a trend line. At the same time, it's caught in between a temporary horizontal level. So to me, this kind of price action where price happens at the moment, especially you can see where the crossovers are, it tends to have a rather strong breakout. Yeah. Where it will actually break, can't say for sure until the market shows me the direction. Dollar for this week didn't really go anywhere. It's kind of, when we look at a daily chart, it's kind of still hugging the horizontal level. It doesn't really show where it is actually heading for. Now, I do get a glimpse from actually the MACD that the histogram that it might be gaining strength. Oops. So you can see that, in fact, price has made a double bottom. Yeah. So quite possible that it might actually, it might disregard this level, or just actually take it off, and head back all the way to 95 level. Yeah. So although on the current chart, I rank dollar quite low, but together with the MACD and what it has shown, I do have a feeling that it might actually go all the way up to 95 level. It's not a huge way, but it does means that for dollar for the upcoming week, it might be strengthening instead of weakening for the short term. Yeah. So please bear in mind that when I do my analysis, I tend to look at it at a midterm, that means from month-to-month basis. For short term, I really mean for the upcoming week only. That's all. And the last is yen. And as I've mentioned last week, yen in fact dropped in rank, but the issue with rank is yen is that it's going to be stuck in this level for quite some time, I suspect. Yeah. It's not going to go anywhere soon. Even on the daily chart, you can see that price has not made any significant movement. Yeah. So it's just going to be stuck between 94 and 95. In fact, this is a very, very narrow range. So now, usually where narrow range occurs, it does suggest that the breakout will be much more violent when it does happen. Yeah. So for now, even though I may think that yen is weak, rather weak in fact, when trading this pair, I'll be watching out for any breakout movement, to see against any other pair if it happens. So that's all for me for this week.
Mate, tell me which is the strongest currency?
Yeah, wait a minute, did I change my mic? Just to me, for this week, I'll still be trying to long Swiss.
Okay, and what's your
So
weakest currency?
it's actually in order, the strongest to the weakest. This will be the order that I'll be trying to trade.
So, mate, I've got some stuff on here. When you say it's an order, these codes are not codes that we normally use, mate. So, SKY, SXY, is that your Swiss?
The first one will be Swiss, long Swiss, BXY will be pound,
Yeah,
then followed by euro. So 1, 2, 3, Aussie,
yeah,
Kiwi,
yeah.
Canadian, DXY, dollar, and the
Yeah.
last will be yen.
So Swiss yen long is your hope for the week, right?
Yeah, that's what I'll be looking out for Swiss yen long if it occurs. Now, I think one thing I need to clarify is that although I did mention that dollar will be, for the upcoming week will be, I expect to rise to 95 level, doesn't mean that I'll be looking for dollar long. Yeah, overall, I'm still a trend trader. So what I do, what I really mean is that while dollar will be gaining strength this week, on my side, I'll be really looking to short dollar when it ends its retracement. Yeah, that's all I'm really waiting to do. I'm not about to attempt a counter trend trade for now.
Fantastic, mate. So you're going to let it retrace and look for your opportunity. And when you get your opportunity for bounce, you'll take your bounce. And 95 is your number overall at this point for we're really looking for it, right?
Yeah.
But I really like that. I really do. Thank you very much for that. Sorry to keep you waiting for so long to get you in, mate. It's just one of those shows where when we get onto stuff, it's really hard to, and it can go. It can go. It's interesting. And I haven't done as much chat as I was hoping to do amongst the rest of you guys. We'll do that for next week. Jeff, 4 charts. What do you got for us? Thank you very much, Lloyd.
Mate, I'm going to be a euro bear, but not against the dollar. And I continue to sack the dollar. And it proved me right again this week where I traded 2 against the dollar and one of them lost. And it's going back in the file as just a ridiculous currency at the moment. I can't trade it because it's so unreliable, in my humble opinion. Have you got my chart or not?
No, mate. My chart's gone, but we don't have your chart.
That's bizarre. Okay, let me try and fix that. And I'm struggling because I don't have a control panel. As you say, it gets hidden.
When I can't find the control panel, it's normally at the top of the screen, but it can be all over the place.
Yeah, no, I can't find it right now, but it's coming.
But I'll grab
Can
the
you
screen.
throw it to me? Yeah, because I can't find it. I really can't.
Okay, let me see if I can make you.
Got it now. I've got it. It's okay.
Great.
All right. As I said, I've sacked the dollar and it proved me right again. Just I've got to leave it alone. It doesn't do me any good at the moment because I don't trust it. I think it could go either way, and I'm an extreme bear, the dollar, etc. But I totally see it's oversold, so I'm out of it. But that doesn't stop me trading at all because I've got some pretty strong opinions, really, from a technical point of view about things like the euro. And I think the euro is extremely overbought. But the currency pairs I want to trade it against are the commodity currencies, in particular, the Aussie and the Canadian dollar. And I think the Canadian dollar's got far more, in my opinion, credentials at the moment than does pretty much anything on the board. And I won't really go into that because it's fundamentally based, and we're not talking fundamentals at the moment. We're talking technicals. But here's what I see from the charts. And currently I'm on Euro Aussie. I think Euro Aussie is going to struggle to get through this level, which is representative of what, 165.60, which is that red line that you can see there. But if you go to well, no, you don't need to move off this chart right now, because you can see how strong historically that level is from a resistance point of view over here, but also from a support point of view over in this little pocket back in April. I really feel this is a strong indicator that this is going to fall, and we're at the top of the box range that you can see here. That yellow line is next week's weekly pivot. If I go down to the smaller time frames, you'll probably see where I'm coming from. We've broken out of that range. We've hit that red line that was on your weekly chart. We've come back into the range. We've even tested the monthly pivot. Well, let's say almost tested the monthly pivot. I'm prepared to say that we did. And we've put in, well, potentially on the 4-hour chart, we have put in a lower high, which is this bar here. If I could actually put a trade in the market right now, I would trade that bar short. So in the absence of giving you a trade call, that is exactly what I'll do in the morning, if and only if, of course, we don't get a big gap somewhere. If we don't get a big gap somewhere, then I will most definitely trade that bar tomorrow short on Euro Aussie. Now, why would I be so, pardon me, confident about that? It's just a technical thing. And I think we've got, if you want to go into pedantics on this, or even chart patterns, you can probably see a left shoulder, head, maybe even right shoulder over. You can call it what you want, but to me, it's bounced off a resistance level. It's had a little bit of support under here on the monthly pivot, but more importantly to me, it's come back inside that box range that you see, and it's given me a lower high. So to me, that is a sell tomorrow, providing, as I said, there's a big caveat on that. The market can do funny things over the weekend. As long as this is intact as a lower high, I will definitely be trading that in the morning short Euro Aussie. That's a 4-hour chart I'm looking at, of course. So that's number one. And I think that's probably, well, no, I think actually the next one's probably the best of them. And it's Euro CAD. Euro CAD, for a few reasons. Should we start at the weekly? I suppose we should. That will show you very clearly that we have a massive rejection here. In fact, we've got 2 or 3 of them at that very level that we're talking about, 157.60, let's say. But we've also got the tails of those rejection bars up here at around about the 160 mark. We've pulled back off that level again. The tricky part here is the weekly pivot, which is these yellow lines that you see on my charts. This is tomorrow's weekly pivot, right? We haven't yet closed below that, which is very, very interesting. And if you go down to the smaller time frames, you can see that equal high here, big double top. I mean, that's a massive double top you're seeing there. We've broken back below that level and retested it. The tricky part here is Friday's bar was an indecisive bar, and it wasn't really sure if it wanted to close below next week's weekly pivot or not, but certainly it closed below the current at that time weekly pivot. So I'm pretty clear here that I'm going to see some downside, in my humble opinion, of course. So let's try and find a trade there. And when I look at that chart, I get more excited than I even was, because what I see is a double setup for me. I've got what I call a clear false break here. False break, not forget the weekly pivot, because that won't be there. It will be there tomorrow at this yellow line, but the trade line that I've got in place here suggests to me that we have come back underneath that trade line, having broken it for the first, sorry, one, yes, for the first time, because it's the only line, and then retested it on the daily pivot of Friday. So again, if I get the opportunity tomorrow, then I will place an order short underneath that bar. This is Euro CAD. Caveat is that we don't get a shift or pardon me, a big gap in the market. But if this looks like this in the morning, then most definitely I will place a trade underneath that. That's the weekly pivot of tomorrow. So, yep, absolutely. That is it's probably the best of them. And the reason is because we've got more than one thing going for us. We've got a bearish engulfing bar here. We've got a clear lower high. We've got a clear lower low. And we've got a clear, in my humble opinion, break of false break of this resistance area here. And also the weekly pivot of tomorrow, if not the weekly pivot of last week. So if you really don't want to take that trade, then there's also that going on as well. There's a couple of options here for me, and I'm all over this. If I can get an opportunity here tomorrow, if the market doesn't gap, I'm short Euro CAD. Just got to find a way in, and I've already got it if the market doesn't gap, as I said. So I'm really tipping I suppose on that basis, the commodity currencies over the euro as of tomorrow. The third of these is an interesting one because it's two commodity currencies versus the other, or one versus the other, and I'm okay with that. Why are these charts up here? Go away. There we go. So the third of these tomorrow is going to be Aussie CAD, one v the other, as I said. This also technically is an interesting scenario for me. And if Ash was here, sorry, mate.
You'd be loving this one, yeah.
Yeah, I like this. This is pretty cool. We've got a very clear chart pattern here. And clearly I'm not the only one who's going to see this. There's a big left shoulder here. There's a big head here. There's a big right shoulder here. The interesting part is we've also got a box range sitting in that area, and we've just come off the top of it. The weekly pivot tomorrow will be here, and we've had a little bit of a bounce off that. I wish it was where where last week's was, because that's where I want to enter the market, pretty much around that level. I think a little bit of a rally here gives me a lower high on that box range that we're talking about, and also, pardon me, the head and shoulders. So I'm really looking at playing this short. I'm not sure where the entry is. That's my only issue with this one. If I look at the daily chart, you can be forgiven for thinking that why on earth would you want to go short here? It just doesn't make sense because it's so much on a bull run. But gee whiz, I'm seeing some warning signs here. I think Julian spoke about this scenario earlier, not necessarily on this pair, but he was talking about the potential for big retracements, not necessarily reversals, but this is absolutely in that category where we can see a clear, well, I can see a clear, I mean, it may not be clear to everyone else, but I can see a clear left shoulder, a clear head, a clear right shoulder here. I only need to see something break and be retested to really get excited here. And as I said, if that was tomorrow's weekly pivot rather than last week's, I'd be extremely excited. But I've got a good catching pen down here in this support trade line as well. Maybe a break and retest, something like that, which gets us underneath the weekly pivot, maybe even a lower high in this vicinity, and I'm good to go. So bearish that one as well. The final one is a wild card for me, but I was very interested to hear Lloyd talk about this pair, and it's Swiss yen. And I called this, I think it was 2 or 3 weeks ago. This looks like hieroglyphics, frankly, if you look at this chart, and that's all because of the decoupling of the euro to the Swissy back in 2015, a day that we'll never forget, us traders. In fact, it's pointless actually showing you that chart apart from that fact. What I saw a few weeks ago was, and you can't even see it here, it's really difficult to see. I'll have to go tighter on the weekly chart. And that even doesn't show it. It's a shame because it looked very obvious to me at the time that we had broken above a very significant level. And I think I was talking about this bar here, that one. And I could only see upside to probably this level here, around about the 118-ish area. Nothing's changed my mind on that. I'd love to see a retracement, however, on the weekly chart. That would have been good, and it hasn't happened. But you see many of these charts at the moment have got not only 1 week, 2 weeks, 3 weeks, but 6, 7, 8, 9 weeks of rallying. The one thing that holds me back here is that particular fact. But I think I'm prepared to accept it on a daily chart. So convinced am I that we're going up to this area, the 118 area, that I think any retracement is an entry for me. And I don't often say that because I'm not a trend trader in any way, shape or form, but I think this one's got legs. I just need to find a way in. And on the daily chart there, you might think, okay, we've got to close above the weekly pivot. There's an entry there. And for some people there will be. For me, there's not. I'm not sure what I need to see here, maybe just a pullback. And I totally get that this looks like a potential head and shoulders as well. So there's probably a nice take profit point, maybe at DR1 of Friday, but certainly at that 116, whatever it is, 30 level up here. But I desperately need to pull back to probably tomorrow's weekly pivot, which coincides with this level here. And then I look to trade this long. And I think there's a bit more left in this one. Until we get up to this level, as I said. So another couple of 100 pips available, but got to have a little bit of a pullback on either the daily chart, well, no, probably the 4-hour chart actually, or any of the smaller time frames later tomorrow. So, mate, that's pretty much where I'm at. I think this is the wild card, this one, because it's more of a trend trade than anything else. And as you know, that's not my thing, but I think the other three are very, very interesting. Aussie CAD, Euro Aussie, and Euro CAD short.
Euro CAD short on the bottom of the 4-hourly bar is what you're looking to do tomorrow as a starting point, right? And you are bullish the CAD,
yeah, that's
right?
number one. I'm bullish the CAD. Yep, definitely.
But I'm just going to grab the screen and just show. We've done this with you recently. I'm just going to see if I can find this. I just need to jump out of this account and into mine. Log into trade account. If you want to know where the weekly pivots are for anything, all you need to do is grab the navigator, grab the market scan out, and put it on here. And there is the weekly pivot, the orange line, and there is the daily pivot for the next day, the blue line. So all you've got to do is click these, and these are here specifically for the weekends to help you find the weekly pivot and the daily pivot for the next week or day.
I've got a comment on that. You know, I found that invaluable. I really have. I think that's a marvelous thing.
Yeah, mate, it took us a while to have the guys program it in too. It was one of those things that can be, it's a bit complicated to trade because of the MT4 considers the Friday bar to not be closed until it opens on to the Monday open. So it actually makes the calculation of it reasonably difficult.
That's why I've never done it. But I think being able to go press a button, yeah, that's really cool.
Yeah, mate. We try, mate. We try pretty hard.
You do.
The rightio. Look, if you are Ravinder and you were up a few $1,000s, I'm keen to have a chat with you. Helen, I might try and have a chat with you this week as well, if that is possible. Crystal, I think I need to have a follow up with you as well. So plenty of people in the room need to be in touch with over the period of time. Simon, hope that things are okay for you in the UK at the moment. Man, I think we're finally going to do it, aren't we? We're finally going to do it, aren't
we? Which one?
An hour 45 into it, I think we're going to wrap up TTR Sunday for today, the 9th of August 2020. Boy, it's been a long show. Boy, it's been an interesting show. I hope you guys have enjoyed it. I just can't remember off the top of my head. I have a feeling that we have Chloe in next week, but I'm not 100% sure on that roster. I'm just trying to scroll back up and see the roster with the team. Is it Chloe next week? You're not able to tell me? I think it's Chloe next week. Here we go. Next week is it's Paul Hutton next week. We've got Paul Hutton next week, Ash the week after Orlando. After that, we'll do a new roster after that, guys. Lots going on in the business, guys. On my session on Wednesday, the company-wide debrief, I'll be talking about the latest addition to the Actions 12 trading team. Guy, I'm looking forward to getting in front of you guys in the next few weeks. He'll be doing something with us in August, doing a half day with you guys. So I'll give you some details on him. Obviously, if you want to watch the YouTube show, you've got Ash and Jeff at 2:55 Singapore time, Monday, Tuesday, Wednesday, Thursday, public holiday in Singapore tomorrow, Jeff. So I'd imagine if we get the publicity right, we may get plenty of people popping into your show for that as well.
Mate, love to see him.
It is a busy old time. Guys, thanks for the feedback and have a wonderful night today. And guys, this week, it's a simple game. Make simple decisions and make them with patience, and it'll all go well. This market isn't a lay down misere easy, but it's not the hardest market I've ever seen, I've got to say. And trade well and make some money. And if you're making some money, get control of the adrenaline. If it's your first time making some money, just get some control of the adrenaline and make good decisions. And I'll tell you this, you'll have heard me say this before, but it's never a bad time to bank the profits. Just put it in the bank and move on if you need to, and take a breath and go away and review what you've done. There's plenty of opportunity coming. This is a world that's changing, and as the world changes, everything these markets change, and that's what we're looking for as traders. Cheers, everybody. It's been wonderful. Love the show. I thought Julian was awesome today. I thought it was just amazing, that stuff, and we're very lucky to have him. He's up $4,000 and 4,000 pips on his trade calls as well. Amazing to have him on board. Cheers, guys. Have a wonderful night tonight. If you're in the Actions Wealth trading team, I'll be in the chat in about 5 minutes. Happy to have a chat with anyone that wants to hang around, and happy to have a sleep if no one wants to hang around. Cheers, guys. Take care. Thanks, Jeff. Thanks for the team. Did I thank the team? Thanks, team.
Happy days. Have a good one, guys.
Hey, Ainsley and Jeff, the last two left. Thanks, guys. Have a wonderful week. We'll talk to you guys during the week. See you all.
Aussie strength.
Am I going to end this?